Hi, I'm Christina Trauthwein. I'm the editor-in-chief of Hotel Business, and I am here right now with Mathew Crosswy, and he's the president at Stonehill. Welcome.
Thank you.
So I understand Stonehill has an announcement and that you've increased your alternative financing capabilities for hotel projects. And I'm wondering what made now the right time for improving access to alternative financing?
Yeah, I don't think it's us, electing a point in time in the market where we're like, hey, this is where we want to focus and provide more capital. It's really where the market is and where we see an inefficiency in the market. The inefficiency that we see today is largely driven by traditional banks continuing to be very conservative in their underwriting and the capital that they're deploying. That's largely driven by regulators, and we especially see a pullback in construction financing where banks are continuing to deleverage their position, which is what's creating that gap in the capital stack. And so that's where our focus is to backfill that gap with alternative sources of financing.
Okay. Why is there an uptick in demand by hoteliers for additional capital to meet loan requirements?
Yeah, so as I noted, that gap where maybe a traditional hotelier underwrites a deal where they need 75% debt because they'll raise 25% equity. That gap where, say, a bank is underwriting to 60% will provide that incremental leverage, whether it's in a mezzanine position or preferred equity or even PACE financing, where we've just recently acquired a PACE company. These are all different avenues where we can efficiently deploy capital and hopefully meet the sponsor's need. That way we can, help them complete whatever their business plan may be so they can get that hotel to a stabilized point, take us out, and go with more traditional financing where there's a lot of liquidity in the market with banks, CMBS. There's a lot of avenues and capital available for assets that are stabilized and performing.
So you mentioned some of the types of alternate gap financing. Do you have any examples of some of the hoteliers you've helped out with this?
Yeah, so it's the list is wide. Some recent transactions we just closed. We just closed a 5-pack of preferred equity with the Bryad Group, who's led by Brad Honingfeld. It was a unique execution. Traditionally, we would have done mezz in that situation. His lenders wouldn't necessarily allow us for mezz, so we structured as preferred equity, and we came into his borrowing entity, and that's just where we can be a little bit more thoughtful and creative, but also provide an overall capital solution. And he was looking for about $20 million so that he could continue to grow his portfolio and meet his future capital needs. So we came in and recapped 5 of his assets, and now we're about to, actually just last week we closed a 6th deal with him in San Diego for the AC, which is another project that we're super excited about, as well as Brad. And he's just proven to be a great partner in terms of, getting his deals done and, communicating and doing exactly what he says he's going to do.
Okay, so let's talk about the type of year that Stonehill is having. I understand that you've provided more than $450 million in financing to about 20 projects nationwide. How are you looking at the rest of the year to end and also into 2020?
Yeah, we think we'll stay on this trajectory. We have a great pipeline. We have a lot of deals that are still in closing. We think that trend will continue, and we'll hopefully finish the year north of $650 million, which would be our best year to date since forming the company. And then into 2020, we don't see any point in time where the banks are going to come back and get aggressive, kind of like what you saw in 2007, which and prior, which really led to the crash. You're seeing more and more debt funds come to the market, so there's more and more capital coming in the market, pursuing these opportunities like what I'm speaking to. But we've been in this space since 2014, and we've built a name, we've built a brand, and we think we'll continue to grow that by identifying these strategic opportunities that we can pivot and directly target and really try and provide a good solution for a bar, the sponsor, as well as us, because at the end of the day, it's got to make sense for everybody involved, and we think we've created that.
Great. Thank you so much for your time.
All right, thank you.